Hey guys, Kurt here. We're back with another episode of Beyond the Basics, and this week's episode is all about partialing, and we even dabbled a little bit into adding into positions. Partialing and adding. Two seemingly easy concepts to understand, but they can be very difficult when you're removing some of your position or when you're adding to some of your position. You need to make sure that you're making those decisions not based on emotions, but based on what you're seeing on the chart, on the time in sales, the volume, things like that. So this week I got to chat with Pierre, and as you'll see, Pierre, he's a young guy, I think 18 years old, and he actually worked at a prop firm prior to joining the BBT community. So hopefully Pierre got to learn a lot this week's episode, and in turn, you guys got to learn as well. Let's dive right in.
Well, hello, BBT community. My name is Pierre, and I'm from Italy. I joined the BBT community about 1.5 months ago. I've been a day trader for about 9 months now. I learned at a proprietary trading firm, and I now trade for myself.
Very cool. Very cool. So I have to ask you, how old are you? And the reason why is obviously I look like I'm 12 years old. So it's always interesting when I run into another trader who looks younger.
Well, I turned 18 recently, actually.
Okay, very cool. So what are the rules in the Netherlands regarding day trade? Are there any rules specific to that? Do you have to be a certain age before you can start trading on the market?
You do need to be above 18. That's
Okay.
the only requirement, really. Regarding investing here in the Netherlands, it's considered really a tax haven because on your net worth, the money you make from investing your own money is the taxes you pay on that is actually 4%. So it's very, we like to call that tax haven.
Yeah, that's interesting. So, in the United States, when we get taxed, obviously we're based on our income bracket. So, depending on how much money you're making is how much you get taxed. So, for example,
True.
Last year I was in like the 30, I think it was like 35 or 32%, which is absolutely outrageous, but
yeah,
such is life, I suppose. There's two things that are guaranteed in life. It's you pay taxes and you die. Yeah, that's about it. So, all right, awesome. Well, okay. So you reached out to me, I think it was last week, and you wanted to have a discussion on partialing and profit taking. So tell me a little bit about your trading style, and then what we'll do is we will dive right in and we'll talk about different methods of taking partials and when to profit, when you should maybe be lightening up your position, things like that.
Sure. Well, I'm a momentum trader slash scalper. So I like to trade the ORBs, ABCD patterns. I do take some reversals. But yeah, I've been wondering about partialing because it has a really big impact on your reward to risk ratio. So, and yeah, I was wondering which strategy suits which personality best.
Yeah, of course. So with profit taking and with partialing, there are a number of different ways that day traders will do that. So you have some day traders where they basically pick their target. So let's say we're trading AMD. AMD is around a $30 stock. They want to get it to 30.30 and they're not going to do anything. It's all or nothing. That's their target. That's when they're getting out 100% of their position. You have other traders like Andrew, where as soon as he hits 1R, he's going to start partialing. And then
he's a very aggressive partialer.
Yes, he is. Yes, he is. And then you have other people where and Norm is kind of this style of trader where he has various levels of profit targets where, if he's taking Apple long at say 222, maybe he has targets at 223, 224, 225, whatever the levels may be. But when you are a momentum trader, it's less about taking profit at specific levels and more so about taking profits when the trade is no longer working out in the fashion that you would want it to. So for example, and we're going to pull up Apple on the, well, unfortunately, Apple was a horrible trader today in the beginning. But if you're trading Apple and you're taking an ORB down as a momentum trade, after you hit 1R, that's when you're typically going to basically say, okay, I can start taking partials now. But for the rest of your position, you have to make decisions on where and when is it a good time to continue to reduce your risk and to put money back into your piggy bank. So with momentum traders, they will have targets, obviously. That's one of the reasons why we go through our pre-market prep every single morning, is we find levels that could certainly act as resistance or support, depending on whether you're taking things long or short. And you're going to take profit there, but that's not it when it comes to momentum trading. With momentum trading, it's also very important to be partialing at loss of momentum. When you're a momentum trader and you're trading in the first half hour, 45 minutes of the market, which is the most volatile time because we're going through this phase of price discovery. We're not really certain where the stock is going to go, whether it's going to trend up, is it going to trend down, is it going to chop sideways? We don't really know yet. So it is very important as a momentum trader to have an idea of how you're going to be taking profit before you get into the trade. So
so this is also like your second lesson, I believe, where you talked about the volume confirmation. So if you don't get that volume confirmation and you're a bit in the profit, you can take some partial to bring your stop loss to break even, perhaps.
Exactly. And that's something that Andrew does. And I don't know if he does it kind of just subconsciously, where it's not working out, I'm going to go ahead and get out some of my position, or if it's because he's actually making that note of this, I need to get out of this position because it's not working. But when it comes to profit taking, obviously it's a little bit different, because a trade not resolving in the way that you want it to isn't the same as a trade that you're suddenly up 5 or 6 Rs with the momentum, right? So with profit taking and with partialing, once you're in a trade, you've decided that you have your stop, you have your quote unquote target that would be basically your all out. It's also important to keep note of the momentum of the trade and what it is doing. So if you're taking an ORB down and you see that, let's say you have a 10-cent stop and you notice that it goes 12 cents in your direction, but then it starts kind of just stuttering. It just gets stuck at that level. It can't go higher. It can't go lower. That's one of those times where the recommendation would be, you definitely need to lighten up your position there, because you're sitting at 1R. Okay. So you've already hit that threshold where you're allowed to start taking profits, but it's just not working the way that you want it to. If you had a level that was 7 cents away, but it gets halfway there and it stalls out, that's a time when I would say, okay, it's time to lighten up your position, take 25% off, take half off, whatever it may be. And then from there, move your stop to break even. Because as momentum traders, it's really important that as soon as your stock loses momentum, you need to be getting out of your trade, or at least reducing your overall risk. Because we know, once again, the first half hour of the market, extremely volatile. And if a stock can't go down or it can't go up, it's going to try going the opposite direction. And that's why you get these violent swings that happen. And once again, we'll take a look at the 1-minute chart on Apple really quickly. As you can see, Apple was very, very difficult to trade this morning. And
yeah, definitely.
You can see that we've got 5 candles that are down. We've got 5 candles that are up. We've got another 7 or 8 candles down. But it was definitely struggling in this 224 to 220 level. And eventually, later on in the morning session, it finally was able to break out over VWAP. And there were a number of people in the BBT community who took this trade. And I happened to be one of them, where I got in right at VWAP and wound up having a really good trade. And that's the whole thing with momentum trading, is that if it's not working out in your favor, you need to be lightening your risk overall. So let's pretend you have a trade that's working, right? It hasn't lost its momentum. It's just continuing to go down in your favor. There's a couple of different ways that you can go about taking profits, okay? So once again, some people take profit based on their risk to reward. So some people, they'll take 20% off at 2R, 20% off at 3R, 20% off at 4R. And that's one of those ways that they let their winners run. And then once they hit their final target, that's when they'll get all out of their position. Some people also, and Eamon is very good at this. Eamon will almost always let his last like 10% run to break even. And the reason why is that if you're a trader who can sit in front of your computer all day and you have no problem holding on to a little piece, you have no idea what that stock is going to do. So you can sometimes set some pretty wide targets out there and just kind of wait, because that extra 10%, let's say 50% of your trades wind up going further than you thought they would. That's an extra bit of money that you're putting away, and you're really not risking all that much. It's if you're, if you have 100 shares or 200 shares, you only have 10 or 20 shares left, and you hold that to your break even. You're basically playing with house money at that point and hoping to catch the bigger move. Does that make sense?
Yeah, it makes sense.
Okay, awesome. Another way that you can take partials as a momentum trader is based on those daily levels that we're selecting. And also moving averages are a really good place to take partials at as well. Moving averages can be kind of tough sometimes, depending on where the stock is sitting. If a stock gaps up, very often it's going to be above all of its moving averages. So you can't really use those as a good way to take partials. But if you're taking reversals, which you did say that you do play from time to time, moving averages are a great place to take a little bit off. So we've got the 9, the 20, the 50, the 200, and depending on the time frames that you're using, some people use the 1, the 2, the 5, the 15, the 30, the hourly. There's almost always going to be some moving average that could be a good target for you to take partials at.
True.
Now, if you're someone like me who likes to hold their positions for a much longer period of time, you have to be much more particular with the way that you're partialing. And the reason why is that if you're a longer term trader, you're probably going to get stopped out more often than not. It's really hard to be a trader with a 60 or 70% win rate and also be a trader who is looking for the bigger moves, because they just don't happen all of that often. So when you are a trend trader like I am, or a longer term trader, you really have to stick to your partials for your profit targets. So if you are a person who looks for 4R or 5R trades, you really can't be doing anything before 4R and 5R unless you get a clear signal in either the volume, the level 2, or the price action itself that you need to be abandoning your trade. And there's a couple of different ways you can go about doing that. And this is actually, you can use this with momentum trading as well, is 5-minute lows. If you get a new 5-minute low when you're in a long position, that's a good sign that that stock just doesn't have the strength to continue higher anymore. Now, keep in mind, obviously stocks are going to eventually have pullbacks, and you'll need to gauge whether what's happening at that time is a pullback versus a full-on reversal. Because it's always unfortunate when you have a trade that is a 3R, 4R, 5R trade, and then it comes back, it pulls back, and you think, oh, it's just a pullback, and it winds up coming all the way back to your break even. I can't tell you how many times I have done that, which is why I've started to implement some rules regarding pullbacks. So in the example that we have here with Apple, is I got long Apple at 224.90, and I had about a 10-cent stop. My stop was beneath the candle that I entered on, and based on the 2-minute chart, not the 5-minute. And my first partial was at high of day, which is where I did take off about 25% of my position. But then I got stuck in a nasty pullback. And because it made a new 5-minute low, I did get out half of my remaining position beneath my initial target, which is obviously a place you never want to be. You want to be taking partials above, not beneath your target.
True.
Well, I was able to get a really nice signal to add back in. And then I was able to I had a larger position than I initially started with, got out most of my position that was remaining back at my target. And then I did get stopped out again before Apple kind of turned into chop consolidation, which right now, if you're watching this, you can see that Apple has been pretty much stuck in the same range for the past 2 hours.
Yeah, I
So
see.
I'm not really missing much, right? I'm glad that I did get out because I would be very, very frustrated at this point that I've been holding on to a trade for 2 hours and it's moved 20
Hmm.
cents. But
True.
yeah. So partialing, what's really important is that before you implement any new type of strategy, you really have to have the metrics to
Hmm.
back up how you're going to be taking partials. So once again, as a momentum trader, if you want to try to employ holding for 2R and then getting all out, or holding for 3R and then getting all out, you need to backtest this
Hmm.
strategy. So
True.
going back through, looking at your journals and seeing, okay, you have, let's say, 100 trades that you're reviewing. And if you saw that on 65 or 70% of your trades, you could have held to 3R without getting stopped out, then
Mhm.
maybe based on your trading style, that's a system that would work for you. And then you could go ahead and start holding your trades for 3R. And then maybe you get out 80%, or maybe you get out 100%. Once again, that's 100% up to you and your style of trading. But unfortunately, without having that information in front of me, and without being you and having your personality, it's really
Hmm.
hard for me to say what would work best for you as a trader. At the end of the day, it's always going to come down to how do you want to trade and what's going to work best for you. But don't be
Hmm.
afraid to try new things,
Oh,
especially
sure.
if you can go through your previous trades and see that, well, based on what I'm seeing here, this is what works. And we're
Hmm.
going to go ahead and give it a try for the next, 1 week or 2 weeks and see how it goes. Uh, because at the very least, you've got the history in your previous trades that shows that it has the theory of working. Now you go ahead and test it either in sim or in live and go from there. Does that make sense?
Yeah, it makes sense. It's trading is all about the data and what you can gather from
Exactly. You worked at a prop firm. I don't need to tell you anything. You know everything. In
it.
fact, excuse me, you should be teaching me right now and telling me all the secrets of how to actually make a ridiculous amount of money, because those guys, they obviously know what they're doing.
Mhm.
So what do you do right now and how is it working out for you?
So right now I've been partialing 25% above my 1R,
Mm-hmm.
and yeah, I don't necessarily partial at specific
Mm-hmm.
R ratios. I look more at the level two and the time of sales.
Mm-hmm.
Um, and yeah, I've also been testing out now, getting out fully at, for example, 1R,
Mm-hmm.
2R, 3R, 4R, just to see what my win ratio is.
Mm-hmm.
And because I know that having a better R ratio with a lower win percentage is actually overall more profitable, but it's more about being able to whether you can handle the psychology of being wrong 9 times in a row and then having that one very good trade, you know.
Yeah, exactly. It's so tough. And when I started transitioning from a 2 to 3 hour trader to a 5 to 10 hour trader, I 100% struggled with that
Yeah, I can
because
imagine.
yeah, you're sitting in a trade and let's say you normally risk $50 per trade and you just get
Hmm.
hit over and over and over, $50 loss,
Hmm.
$50 loss, $50 loss. And then finally you have a trade that's working out. Well, when that trade hits $100, like you want to start mashing the partials, right? Because you're like,
Yeah.
nothing is working today. So why would this work? Why would
Hmm.
this trade work out over any of the other ones I've taken? And that's the problem, right? Is if you have a
Hmm.
strategy and it works, you've got to rely on that strategy and accept
Hmm.
the losses because there is no perfect strategy.
Hmm.
And
Exactly.
the only way you're going to be consistent is if you're utilizing the same strategy to the T over and over and over again. And yesterday, I went over a Pepsi trade that I took, and it was one of those just perfect trades that worked out beautifully. I never got stopped out of my position until, the very end. I added uh, at the perfect points throughout.
Uh,
And that's one of those trades where it's a reminder that, hey, your strategy does work and you can have really nice winners when you stick to
mhm.
your strategy. But if you just partial willy nilly because you're staring at your
Mhm.
P&L,
Yeah.
that ruins your strategy for you. So it can be
Yeah,
tough. Go ahead.
one thing I learned from Andrew is don't trade your P&L, but trade the charts.
Exactly.
Mhm.
Exactly. So do you keep your P&L open? where it's visible, or do you hide it? And are you trading real or sim? I didn't even ask you.
I'm trading simulator right now,
Okay.
actually.
Gotcha.
But yeah, I do look at the P&L, but yeah, just to keep an eye on it because I have multiple positions running at a time, so I kind of see what they're doing while looking at other things.
Yeah, I do the same thing. Is I have mine visible, but I'm not necessarily focusing on it. I actually like having it up because it's a lot easier to see where did I get in to the penny.
Yeah,
because sometimes when you mash a hotkey, you don't really know. So, I look over and glance at it. But I have 7 monitors, and it's on the monitor way over there. So I have to practically like get out of my chair to see it. But yeah, you're right. Is you can't trade your P&L, and that's why we obviously recommend for those of you who can just hide it. I know that there are many people within BBT, moderators include like Peter, Carlos. I don't think either one of them, I don't think they actually look at their P&L until they're done trading, because you can always get a feel for how you're trading, right? If you're getting stopped out of all your trades, you're probably not having a good day. Whereas if you're taking partials and stopping out at break even, you know that you're probably having a better day. So yeah, profit taking, it really is all about, figuring out what's best for you, what you can do consistently, because that's the other thing too. And like we were talking about earlier, is whatever method you use, whatever you decide to do, it has to be consistent, because otherwise there's no way that you will ever figure out what works best for you. So whether that's taking profits at specific levels, taking profits at loss of momentum, or taking profits at R multiples, you need to do it, and you need to do it consistently. And after you have a minimum, 2 or 3 weeks of trying it out, go over the data, review the results, and see how it would have compared had you done something differently. So there was a member in the chat room today who actually posted up an Excel sheet where he had been reviewing all of his trades, and instead of trying out a new strategy, he was actually just basically back testing different methods for partialing. So I can't remember off the top of my head exactly what they were. I'm also getting ridiculous amounts of FOMO right now watching Apple at 226.60 because I'm looking at this chart and I'm like, oh man, there's so many entries to get back in this thing. But anyway, where he had it based on taking a partial at like 2R and then holding the rest for break even, taking all out at 3R, or taking all out at 4R. And I think for his specific example, if he just did all or nothing 4R trading, he would have been the most profitable. But the only way that he knows that is, once again, because he's been compiling the data and going back and looking at it. And
that's right.
You have to remember, psychology can play some terrible tricks on you if you're trying something new, or if you've had a string of losses in a row. It becomes very difficult to stick to those rules. So do you have any other questions for me with partialing? Fortunately, it's not a very difficult topic. It's pretty common sense, right? There's a few ways you can do it. But do you have any questions for me?
No, not off the top of my head, actually.
Okay. No, that's fine. That's fine. Profit taking, like I said, it's not all that advanced unless you try and make it that way, which I've heard some pretty crazy things that are out there. I know somebody who only takes partials when I think the stock goes up 1.36% of its overall price, which is, if it works for him, awesome. For someone like me, that just seems like kind of a random arbitrary number. How do you decide that? And how are you calculating out your risk to reward? That 1.36%, like, that's great, right? If you're in a stock with 1% of your account, or actually with your full buying power, and you're willing to risk 1%, that would be a 1.36% increase per trade. But then you get back to where you have to have a greater than 50% success rate, which is obviously a lot of traders have that. But what's important with that 50% success rate is that you have to be consistent. You have to be consistent, a 2R trader or a 1.5R trader, in order to get that, because otherwise that number doesn't actually matter. You can win on 50% of your trades or 60% of your trades, But if your trades aren't, some of them are 1R, some of them are only half an R, and then
Hmm.
obviously you have their losers, like, well, that doesn't really get you anywhere. That puts you back at break even. And that's one of the hardest things that traders who take good setups, they struggle with, is they get out of their trades way too early. So my recommendation to everyone out there is always find something that fits your personality, whether it be taking it based on risk to reward, taking it based on target levels, or simply taking partials based on a strategy no longer working in the way that you want to. And that's, once again, like you with momentum trading. If the momentum's not in your favor, or it's just died off completely, if you're not getting that volume confirmation
Hmm.
anymore,
Yeah.
get out, right? Because it can always come back. And just an example sitting right here in front of me is, I got out of Apple because it
Hmm.
wasn't trending, but then we
Yeah.
had a really nice bullish move at 1245. We had a pullback, which was a hammer down to the 20 moving average. And then you had a nice little doji candle. Could have gotten in as it broke over this doji at 226. Stop would have been 225.87. And here we are now sitting up 90 cents. So that would have been a good 6 or 7 R trade. There's always
Hmm.
more strategies. There's always more trades at any given point or any given stock on any given day. You can usually get, 5 to 10 trades out of a stock that are smart setups. So don't worry if you get knocked out of a trade. It's okay.
Hmm.
So,
That's right.
all right. So another thing that you wanted to talk about besides partialing is you wanted to talk about how to add into your positions. So
Yeah,
adding
that's
is
right.
something that is infinitely more difficult than partialing, because partialing, you can almost be you can be robotic with it to a certain extent,
Hmm.
where you take partials at your R's, you take partials at levels, or you take partials when the stock basically stops moving in your direction, right? That's pretty easy. There's some intuition that needs to be built into that, because what is the loss of momentum? Some people will say it's when it loses a specific moving average. Some people will say when it actually turns around and starts pulling back or reversing. That's kind of up in
Hmm.
the air. But when it comes to adding, it's a completely different beast. So there are a couple of different ways that you can add to your position. So the first way I'm going to talk about is actually entering a position with a smaller size initially. So what some people like to do when they are trading is that, because momentum traders often get in before breakouts are occurring, to get in one of the best prices possible, you just don't have the
Hmm.
confirmation, right? So if you're taking an A B C D setup, you have your A, which is the low, you have your B, which is the high, and the C is like somewhere
Hmm.
in the middle. Some people will try and get in as close to C as possible, even within just a couple of cents.
Hmm. I see.
Obviously, the issue with that is, well, what happens if there is no D? Well, the issue is that you get stopped out. So
Hmm.
what you do to combat that a little bit is, if you want to get in before you get the confirmation at that breakout point, you get in, say, half size or smaller size, or whatever it may be, and then you add once you get confirmation. So that's going to be one example of adding. And some people, what they do is they'll take a full size position and then
Hmm.
add once they get confirmation. So it's
Okay.
almost like they have a double size trade. But when you really think about it, it's the exact same thing, right? It's just, how much are they willing to risk? Are they willing to risk $100 per trade, or are they willing to risk 200, 500 or 1,000? So that's kind of the
Yeah.
same thing. The next way that you can go about adding to a trade is based on brand new setups. And this is how I like to add to my trades. So let's say I'm in a stock and I think that it's going to do a longer run, an hour or two, or it's going to go to a certain price. I'm always going to look for opportunities within that stock to add. And like we talked about earlier today in this Apple trade, I had a really nice opportunity to add to my trade because it did a pullback to what was initially a resistance level. That resistance level turned into support, and I added once I got confirmation. And because of that, I wound up getting an extra, 50, 60 cents on my trade that I initially wouldn't have gotten had I not added to that. So as a momentum trader, you're primarily using the 1 in 5 minute charts, correct?
Yeah, that's right.
Awesome. So for a momentum trader, what that means is There's a couple of different times you can add. You can add on either new 1 minute setups. So if you're taking a setup because it's a 5 minute setup, and within that 5 minute setup, it continues and it starts trending up in your direction, and what I like to call momentum trends, where in the first 15 minutes or a half hour, stocks can just rip higher. If you get little micro pullbacks on your 1 minute chart within your 5 minute setups, like, you can add on those.
Yeah, sort of like ABCD patterns along
Exactly.
the way.
Or, little pullbacks, things like that.
Yeah.
Exactly. Those are good times to add. Now, when you're adding, you have to be very careful about your size. If your initial starting position is 500 shares and you get a new setup on the 1 minute chart, I'm going to say you probably shouldn't double your position, because what happens if that ABCD fails? Well, now you're at $0. It'll wind up being break even when you get stopped out because of when you're adding to your position. So what I like to do is I like to add anywhere from like 10 to 25% to my position. Sometimes I'll add 50% if I'm really confident and I've got a lot of momentum in my favor. Then I can be a little more heavy with that. So there was a stock a while back, Tiffany's. They had earnings where that was a stock where you could most certainly just continue to add to your position every time you got a pullback, because there was a lot of momentum behind that stock. So, but what's really important is that there have to be signals for you to add to your position. You can't just add willy-nilly because you think this is going to be a runner and you want to make more money on it. Because the problem with that mentality is that what happens when it pulls back? Are you going to be able to stick with your initial stop that you had with the larger size? Because when you're adding, the benefit of adding with new setups is that you have a very clear technical stop. It's when other people should be getting into this trade and joining you. And if they're not joining you, well, as a momentum trader, well, you don't want to be in that stock anymore anyway. So sometimes it'll work out and you'll wind up having a bigger winner, but other times it won't, and you'll get stopped out for what in theory is a smaller winner than what you could have theoretically had. And once again, it all comes back to, have you tested your strategies? Are they tried and true? Have you gone and seen how this type of trading would impact your overall P&L? If you can go back and backtest and look at your trades and see the theoretical trading or adding opportunities, and you don't have to necessarily have taken these trades, right? But if you just said, oh, well, if I added 50% here, would it have worked out? Because we can see a failed setup on a chart just as much as we can see a successful setup, right? If you see an ABCD pattern where you would have added to your position, but it wound up rolling over and not working out, well, then, okay, chalk that one up to one of the times it wouldn't work out. And then you go back through, and after you find all these different scenarios, you compare what your P&L would have been in theory to what it actually was, and see, is adding something that you want to add to your strategies, or is it just a little too complex, or based on your strategies and your style of trading, is adding not something that's in the books for you? I know a lot of traders that don't ever add to their trades. And there's nothing wrong with that whatsoever. Obviously, the benefit to adding is that there's theoretically more reward, but on the other hand, there's also more risk. And that's something that you need to decide. So do you ever add to your trades or not really?
Yeah, I do add. If I'm in a running trade, then I like to add at the ABCD patterns.
Exactly.
So basic or bull flags, that sort of those sort of patterns.
Yeah, so you do wait for new setups to form. You're not just adding because you want to add, or adding because you've got $100 in your in your unrealized or something like that. That's good, because a lot of traders, especially new traders, they'll be up in their P&L and they'll think, oh, this is the perfect opportunity to add because I'm green right now, and I can go ahead and double my position, and even if it pulls back halfway, like whatever, I'm out only half. Well, the problem is that pullbacks aren't always 50% or 40% or 60%. Is pullbacks are different every single stock. So if you wait, however, to add like you do in one of those pullbacks, you're all the more likely to succeed. And the great thing about adding is the entries don't have to be as perfect, and you don't have to try and get in earlier with them. You can be very patient and wait for the confirmation. So once again, we're looking at this Apple chart on my screen. It's, I waited for a new 2-minute high before I added to my trade. Could I have added down here at 225.28 instead of 225.40? Yeah, I could have. But the likelihood of success was so much lower, and there's nothing worse than getting stopped out of a trade because of what was a silly pullback.
True.
Or a silly ad with a pullback, instead of you getting stopped out because the trade was no longer working in your fashion.
Yeah, I've had many times where I would have a hotkey mistake, and instead of covering like 25 of my position, I would add 25% of my position, and that would force me to get out of a good trade, because then the risk of that trade, including the 25% add, would be too much for my plan. So
Yep.
that kind of forces me to get out. Yeah.
Yep. I back when I was using different software and not DAS, the way I had my hotkeys set up initially was wrong, and I was in I think it was like a 5,000 share position of AMD, which was well within my risk parameters and the style that I was trading back then. And I went to cover half of my position. I pressed the wrong button.
Oh, no.
I doubled up my position. So I was sitting on 10,000 shares of AMD, and I was very fortunate where I actually got out in like a 10-cent pop. So it was great. It was one of those ones where you're like, whew.
Yeah.
Because it could have very easily gone the other way, right? What had happened if instead of having a 10-cent pop, I had a 10-cent dump or 15-cent dump or a dollar dump? I don't know how familiar you are with me, but I've had a $10,000 loss before on a single stock, single trade. So, I never want to have that experience again. So now I'm very, very careful, and I still make hockey mistakes here and there, but as soon as I notice them, I'm out. I don't care if it's going in my direction or against. Yeah, you just have to get out, because
absolutely,
it completely screws up your psychology when you have a share size that's larger than what you're comfortable with. Now, as you are growing as a trader, you will eventually start to increase your risk, and you will be uncomfortable with it, which is fine. But that's not you're not going from a 1,000 shares to 10,000 shares. You're going from 1,000 shares to 1,500 or something like that, or 1,200. So that's manageable. Great. Well, do you have any other questions for me? Otherwise, we will go ahead and wrap this up.
No, that was it for today.
Awesome. Well, Pierre, I appreciate you joining me today for this episode, this week's episode of Beyond the Basics. I think that partialing and adding is something that does take some time and some hard work, as we discussed, trying to figure out what works best for you. But when you go through and you take the time to figure out what fits your strategy and your personality best, it really can make it so that you can really, grow those profits while still managing your risk at the same time.
Yeah, for sure.
Awesome. Well, thanks so much.
And thank you for your knowledge.
If you are interested in joining me in a discussion on a day trading topic of your choosing, please send me an email to kurt@bearbulletraders.com. Please be prepared to provide me with your bearbulletraders.com username.